So, a very warm good afternoon to one and all, and welcome to the briefing session for today. That is 18th of March, Wednesday. And today we have the FOMC meeting, which we've been waiting for almost 2 months, right? Because they have postponed this meeting for the month of Feb, and now we have that meeting. So, without wasting time, we start the session. But before that, let me give you my introduction. So, my name is Anurag and I'm the Senior Client Success and Learning Manager. So before just I start the sessions, I just want to confirm that my report visuals are clear and my voice is audible. Okay, so let's start. So the most important news or the most major catalytic news for today is the FOMC rate decision, which is going to happen at 10 p.m. according to the Dubai timing, right? And after that, high probability that at the time of the interest rate decision, you'll not see that much impressive moment. But when the Powell start speaking in the press conference, right, and gave us the hints related to the future projections of the Fed, then there will be a lot of turbulence in the market, right? So there is 99.2% probability of a hold at 3.5% to 3.75%. And this is the thing which has been already traded into the market, right? People have already created the positions. Now that is the reason speech is the most important thing, right? So the speech will act as a surprising factor, right? Because it will give lot of hindsights that what Powell is saying, right? So we need to see. So hawkish for the USD surges, gold is going to struggle, BTC is going to give us a drop. Dovish, if there is any dovish hints, then risk on really is high probability. Okay. Then today also we have the US PPI data at 4:30 p.m. right? So this is the data which is also going to bring lot of volatility into the prices. Then we have the US housing starts at the 4:30 p.m. Then we already have the Bank of Japan interest rate decisions, right? Currently, while making at this report, the VIX at 30, and VIX means the fear index. So the fear index is rising. Although when the fear index is rising, gold is going to get boost because of this, although we haven't seen such kind of movement because right now institutions are designing a liquidity trap in gold, which we are going to discuss in the second part of this briefing in a very great detail. So let's move ahead with the sessions, right? So these are the report structure that total there are 10 sections of this report. So first we have the executive summary, then we have the top 10 market development. So we are not going to discuss all the things in very detail. We just try to touch everything from all the sections, right? And you'll get the copy of this PDF. For this, you need to visit my official social media handle or my official YouTube channel. Over there, you'll find the description, and those who are the existing client will get the access just by sharing a single message to the relationship manager, or they can visit our BMN Trading Insight groups. Over there, they can find the PDF format of this report. Then I've included all the charts also just to see, right? But after discussing this thing, we go to the light chart and try to connect the dots that what we have studied in the macroeconomic thing and how the market is reacting to those news and those things which we have discussed. Then we have the complete Dubai time event calendar throughout this week, right, to give you the reference. Then we have the FOMC scenario playbook. So this will give you the three scenarios which we can expect from the market, that how the market is going to react, and according to the reaction, what actions you need to take as a retail trader. We are going to discuss that. Then we'll discuss the technical summary, then the fund allocation part, that is the money management part, right? Then step by step trading strategy, the what are the best strategies which we can apply, especially into gold, from where to take entries, where to put your stops, and where to have your targets, right? Then we discuss the key risk and the risk events or the data points, right? And what are the time zone reference for that? So let's move. Below, I've given the social media handle link, that is the LinkedIn profile and all. Okay. So this is the news which we have already discussed, right? So the confirmed data that gold is futures, if I talk about, is trading at 5,000 at 6.89 at the time while making this report, and right now it is trading above its level. It is trading around 5010 or 5015 level, right? WTI at 97. We have the escalation between the Iran and Israel. So here I've given the live price, right? And here I've given my biasness that according to the chart, what I can see in the market trajectory, right? So for the gold, trend is flat, moving sideways, right? Wait for the FOMC. The range is 4996 and 5053. Within this range, prices are going to move. If there is any kind of dovish signs, then high probability that prices might go up to the level of 5208. And if there is an hawkish signs, then there will be a retest into the prices, right? So this is the thing for gold. Now let's see silver. So silver is also, the trend is getting weaker. That means prices are going downwards. So bears are very strong. Then WTI bullish, for DXY strong bull, right? And the FOMC data is going to be very important. Then for the Euro USD is also bearish, and USD JPY, the trend is very strong, and towards the biasness is very dangerous because JPY is getting weaker, and today we have a very important data. So a very big movement will come into this. Then comes to the Bitcoin. So it's trading between the range of 74 to 75K. So the trading approach will be cautious, that wait for the prices, right? We'll discuss everything on the chart just to give you an sneak peek very fast. S&P 500 is flat. It is all S&P 500 is also waiting for the data to be released. Then we have the US 10-year yield, right? And over here I've given the stack. That means sometime it is very high, sometime it is very low, right? Which is not at all a very good sign. Then move to the next section. So here are the top 10 important market moving developments, right? So this is the thing on which we are going to spend a quite a bit long time over here, right? So FMC rate decisions tonight at 10 p.m. The important part is this, that what you need to do, right? So over here I've given the action. So if you want to know more, if you are a curious soul, so study this. I've connected all the important data figures, right? And how we have got this 99.2% of probability that there will be a halt. So the reason have been explained. Why this news is important for you. If you are curious, then you can go with this, right? Otherwise, just focus on the trader action plan, right? What exactly you have to do. Then for the US PPI data, so same for the PPI trading plan. So at 4:15 p.m. this is going to be released, right? Stop trading at that point of time, right? And wait for the market to react. Buy gold if you find buy gold prices between the range of 500 and 5010 right now, which is the current price level. Same levels I've given for the Euro USD and other important pairs which are going to be impacted by this data release. Then moving to the next section, that is the gold, right? So especially I've taken the JP Morgan bullion trading, how they are accumulating, how much gold physically they are having into their vault, right? And what they are doing, right? So I have analyzed the CFTC data that hedge funds are very long, right? If I talk about the ratio between the sell and buy, so they are 1:5. That means they have one contract in sell and five contracts toward the buy side, and prices is not reacting that much. That means right now the accumulation phase is working, right? So we'll discuss that on the chart because then only you'll understand that what exactly I want to tell you, right? So Bitcoin is going to test the pivotal resistance at 74, right, and 76. So if prices break this level, high probability that we've been continuously telling that Bitcoin prices may get a rebound toward the upside and might test the 80,000 levels very soon. And because of the energy prices, and right now all of a sudden we have seen that people are selling their gold positions or other riskier assets and converting into the crypto assets or into the safe haven assets. And I'm not talking about the retail traders, I'm talking about the institutions. Retail traders are following the trend because they have seen that there is a sudden fall into the prices, and everybody is taking sales calls, right? Sales side positions, which is not the right thing. Then for the WTI, because of the Iran conflict, there are a lot of things are disturbing the supply of oil, right, which we have seen. So over here, I have visited a lot of other websites and given their remarks that what they are like BlackRock investment, the flow of energy and goods through the Strait of Hormuz, the conduit for a fifth of the world's oil and LNG is a key, right? And because of this, European market has been impacted, but a record release of about 400 million barrels, which we have seen, right? So, which is impacting the market, which is a very good sign. So it is a kind of relief for the prices, right? Okay. Now, we have discussed the core PC. So although today's we don't have that much data, but yes, I've given the impact should be high of this data release, especially the core PC, which is the personal consumption expenditure. That means how much people are spending, right? We have seen that NFP have shown negative figures, non-farm payrolls have surprised the market, right? So it is telling that market is in turbulence, right? And if this is the case, we want this core PC to be in negative figures or lesser than the expectation. If this comes higher, then if people don't have job and still they are spending, then there will be some kind of discrepancy between the data releases, right? And that will be a surprise for the market, which will bring lot of big traders to square off their positions, right? And create new positions, right, which will bring a lot of volatility into the prices, especially the USD and gold prices. Then moving ahead towards the FOMC outcome, right? So exact market responses, how to trade each thing tonight, right? So this there are three scenarios, right? Three completely different asset classes responses I've given. Scenario one, if there is an hawkish, that means if they increase the interest rate, or if in their speech they show that in the future they are going to increase the interest rate, then USD is going to get stronger and gold is going to take more dip down, right? Talk about BTC may drop by 5 to 7%, right? Because of the bond sales, right? It will push the BTC prices towards the downside, and because the inflations are rising, it will have a direct impact on the bond yields, right? Euro USD will fall. Scenario two, if things are neutral, no change, right? So muted response, then 48 hour of drift based on 2025 pattern. Same kind of thing happened in the 2025 also. Still likely a modest decline post announcement, that before the data release there will be a sudden fall into the prices of gold, right? That is a liquidity sweep, right? That is the opportunity from where we need to create a buy call. Then, moving on to the third scenario, that is the dovish scenario, the most powerful bullish catalyst of 2026. So, if this happens, gold might break the 5052 and 5200 levels, right? High probability. Euro USD also might recover from the 1.1500 levels. So, we need to see this. Over here, I've given the trader action plan, right? Here you'll get the full event calendar, right, according to the Dubai timing, and here I've given the impact. And what you need to do, which asset class is going to be impacted by this, I've mentioned over here, right, throughout this week, right? So almost 3 days are remaining. ICT candlestick analysis I have given over here. A lot of people find it very difficult to identify all those things. So I've identified these things. So don't look at the chart because we are going to go into the chart and then discuss. Over here, I've given you the range, that where is the supply side order block is located, right? Why the reason and why it is having significance. So here I have given, right? FPG zone, current zone, and everything. Now, indicator, what indicators are telling us? So I've used the RSI, right? Volume and the pattern. So everything has been given over here, right? To take you a very correct decisions, right? So for each and every asset class, I've given you the reference points right over here. Just go through it, you'll find everything, right? Even I've given the trade plans also, right? If FMC is hawkish, so buy gold dip to 4980. So between this, you can create your buy orders. DOB means the demand order block, right? That order block which is resting below, which is the support, right? Where you need to put your stops, where you need to put your targets, and why I've chosen this as stops and targets. The logic or the rationale have been given over here, right? And the visual reference is given over here. So I'm not going to discuss because we are going to discuss everything on the chart. So just have a quick look that this is the important part where we need to have a focus. That is the full scenario playbook, right? So if things came hawkish, zero cuts, then what you need to do, I've given the probability also, right, over here, that what are the chances. So for gold, this is the level, right? This will be your first support level, right? This will be your stop, this would be your target if this scenario happens. If neutral, then this scenario. If dovish, then this scenario, right? Same for all the asset classes I have given over here, right? The same thing we are going to discuss on the technical chart, but those who have not attended this session, they can take help of this PDF file post this briefing session. Here I've given the trend, RSI, what MACD is telling us, what are the key zones, what kind of market pattern or market structures we can identify, whether there is a consolidation, then there will be a breakout, right? If there is a continuation, so we need to identify the trend correctly. So over here I've identified everything in a very detail, and I've given you that which kind of market power is active right now. Either bulls are in control or bears are in control, right? And the important levels I've given over here, right? The catalytic factors for this. In the last your allocation framework, lot of people face difficulty that if I have a $1,000 account, $5,000 account, $10,000 account, how should I decide that how much amount I need to deploy for gold, for WTI, how I need to design my CFD portfolio. So over here I've given that you need to allocate your 20% fund. That doesn't mean that you need to take uh, total trades of gold. No, you have to keep aside your 20% just for gold. You need to take the risk of 0.7%, right? Take at least two trades, right? One right now, one after the FMC decision. Maximum loss would be 1.5% you can bear on a single trade or on a single script, right? So for this, you can follow, and you can follow it on a daily basis. If you're holding this position, so I've given you the entry levels, right? This is for the traders who want to keep their positions for a quite a bit longer period of time. So what they need to do, right? What are the catalytic triggers which they have to keep into mind? So what here I've given everything, because we have a lot of clients who tend to invest and hold their positions for a very longer period of time. Or if your gold position is being stuck right now, suppose you have taken buy call and again prices are going downwards, then what would be the potential areas which can be tested by the market, and from where we are expecting a reversal or a rebounds into the prices. So that thing is given over here, right? Step by step trading strategies I've given, that if you are starting your day, then how you need to see the data. So I've given you the chronology, right, in a very structured manner, right? So if you're trading only housing data, so on the housing data, whatever the momentum is coming, how you need to create that momentum, right? What this data is telling you, so what exact action you need to take, this is given in this report, right? Here I've given the strategy B, that from where you need to take, right? Activate this trade only on hawkish outcome. So this is especially for the FOMC, because a lot of people, when we have the interest rate decisions, they don't know that how to react to the market reaction. So this is the thing which will give you that from which exact price point you need to provide your reaction to the market, and till what time you need to watch the reaction of the market. So here strategy C is given, that is the pre and the post FMC scenarios I've given, right? R by R, Dubai game plan I have given over here, and the time zones I've given. Okay. So that's all related to the macroeconomic and news geopolitical events. Now let's move on to the Next part, and that is the more interesting part, that is the live charts. So now I think I hope you have access to my screen, right? So I need to show you two charts, right? So this is the H4 chart of gold, right? And you can see that I have marked this arrow over here, which is at 5010, which we've been discussing that if prices went above the 5,000 mark and 5010 mark, then you need to create a buy call. Why? Because this is the reason from this is the line, this is the arrow from where the prices are continuously being rejected. So I marked this area as the mid magnet area, right? Then gold prices are right now in a corrective phase, right? Which is a time correction. That means I use three moving averages over here, right? Simple moving averages, right? One is the 55, 34, and 21, and I have uh, used over here, right? Three different colors, right? And prices are taking a corrections towards the zone of this, right? This is the trend line which I've marked, and this is the trend line I've marked over here, right? So I can find a descending triangle formation over here, and high probability that this area at 4970, which is the low of this area, is the stop loss area. So high probability that there will be a sharp fall into the prices toward the downside, right? So if you are aggressive, take a sell call, right? I already given a sell call from the 4985 levels by keeping my stop losses above the 5025 level, right? So still there are chances that prices may sweep all the stop losses which are resting below the low this area. Then there are two order blocks, right? Very strong order blocks. So if prices came down, high probability that there will be a sharp fall and prices will get a reversal from this because we have two order blocks sitting over here. So first order block demand zone is at 4931, which is a very good buying level, right? Second is the 4887 and 4854. That means how much downside movement we are expecting till 4854.26 exactly. We are expecting that prices might fall. And from here, if we see an exhaustion, which confirms the liquidity sweep, and then we have a green candle which is showing strength toward the upside, that is the time to create your buy positions. And that is the trap which the institutions have designed it right now, right? So because of this short impulsive move towards the upside, lot of people have taken the buy call, right? And lot of buy limit orders are still pending over here, so they are going to go down and sweep all the liquidity which are resting at this important zone areas, right? So keep this in mind, right? And for the above targets also, the upper liquidity area, that before the FOMC meeting, instead of going down, if prices goes up, right? So this would be the range from where we are expecting a reversal into the prices, right? Two reasons. First, I've connected this lines, right, which I've highlighted with this blue circle, right? So see, prices have breaked it, then again retested it, then again they are trying to go down, but they have still they haven't breached the low of this candle. That means still the game is being played between the range of this high and this low, right? So mark this area, this would be the most crucial area. Second thing, if prices went up, then this is the trend line, right? This trend line, right, which is the ascending one, and this is the descending trend line, right? So we have this apex, and this is exactly overlapping at the moving average of 34. Second confirmation. Third, that is the reason I marked this area as an important upper liquidity area. So high probability, if prices reach this area, don't get trapped into that bull momentum. Wait for the prices. High probability that you might find a rejections toward the downside, right? Because prices will come at this level, right? Institutions want to accumulate gold from this level, right? Now let's come on a smaller time frame, that is the H1, right? So over here I've used a linear regression channel, and this is the linear line of this sideways consolidation, and see how the market is being respecting it. So prices went down again, they get the exhaustion. So within this specific range, and this is the same range which we have discussed, the low and the high, right, which we have discussed on the H4 time frame. So it's still prices are being rejected from the mid band of the regression channel, right? And this is the regression line, right? So prices went down again, we have seen the exhaustion, so we need a clear breakout below the low of this candle, right? Until the time the market is going to move sideways. And whenever there is any very important data, if you calculate your pivot points by adding high, low, and close of the previous day, you'll get your pivot near this regression line only, and prices is going to sustain or maintain their grounds within this pivot level only, and then we'll have a breakout, right? Now you need to count the candles, that how many candles have been formed above it and below it, and whichever side the candles are heavy, more SLs are resting into that side. So if lot of candles are over here, right, and prices are going downwards, that means lot of people have taken sell call and the liquidity is resting above the channel. If there are lot of candles toward the downside, and again there is an rejections toward the upside, so lot of people, they are going to safeguard their positions, right? So their stop losses are resting below it, right? So this is a very simple approach, just to know in advance that in which direction we are expecting prices to give us a first breakout, right, which may be a fake out after the data release, right? So keep this into mind, right? Now let's move on to the silver. Same is the case with silver, but not like gold, right? So this is the last swing which have been made, and over here we have a classic bearish divergence. That means buyers have been activated from this level. All of a sudden they have pushed the prices upwards, and again sellers have tried to push down the prices, right, from this trend line, right, but failed, and again we have a very strong candle buy. So these are the footprints. This strong impulsive move is the footprints of large traders, right, and their stop losses are resting below this, right? So if prices coming back into their zone, they are safeguarding their positions which they have created. So they have tried to push the prices, but these two sellers are so strong that they have keep the prices below or within the range of their impulsive move, right? So something big is going to happen, right? And see this area also, they have just sweep the liquidity below this, and then again they have tried to go up, then again they have breached this high but failed to give us a close, right? Now if I want to take any call, the confirmation would be come after a strong candle close above or below it, right? First. Second thing, this is the first candle which have tested this zone, right? I need a very strong candle to give me a close below this, then a retest, there is a formation of high and a lower high formation, then I think of taking a sell call, right, to help the big institutions to hunt the liquidity which are resting, right? So if more retailers are over here, right, they get trapped, then their stop losses are going to be taken by the market for today, especially when the FMC is going to happen. So wait for the reaction points and the extreme points, right? Once the extreme points is being tested, then think of taking a buy call. Second thing, this is the low point and this is the low point. So here we have lower low formations, here we have low and higher low formations. That means a bullish divergence is being forming, right? But they have tried and still the sellers are pushing. But if again prices goes above and give us a close above it, then we have a candle above the swing point also above this zone. We can think of taking a buy call, and then my target would be at 84.78 levels, right? Now come to the US oil, right? So see this, these are the equal bottoms which have been made, and this is a monthly chart, right? Because we have lot of turbulence from the 20th Feb. We've been started a war, right? And we've been watching this war and how the market have reacted, and sudden spike into the price, and all of a sudden lot of selling has been came. Now let's have a microscopic look on H4 time frame. So see, if you see my Bollinger Bands, right? I've used the 14 period, and they are continuously trading in a lower band of the Bollinger Band. But the Bollinger Band is squeezing. That means very few people are active right now. Liquidity is not there. So high probability that there will be a sharp fall into the prices if prices breaks this area, right? And see this area very carefully. Shoulder, head, then again a shoulder, and the retest of the neckline. So if prices goes up above the high of this candle, take buy call, keep your stop losses below the neckline, right? If prices from here itself in a H4 time frame, if prices get rejections toward the downside and give us a close, then from the neckline you can place your sell limit order towards the downside, right? Because lot of tankers are now getting permissions to pass the Strait of Hormuz, right? Iran is expecting Chinese yuan as a fees right now, and it is allowing Chinese tankers and some few ally countries tankers to pass through this. So supply disruption is vanishing right now, and that is the reason market may react to it, right? Any peaceful news will come, and then there will be a sudden fall into the prices of oil. For the natural gas, so prices spiked up. Then again, same like the crude. Again, I've drawn this trend line. That trend line have been broken. Then prices have retested it, and now again it is going downwards. But still, I am not that much aggressive toward the downside. Still, I have hope that there will be a reversal into the prices. This is a daily time frame. Now let's have a look into the H1C. Prices have been fallen. Now made the bottom, and just you need to mark this bottom and wait for the prices to give you a breakout, right? After breakout, so breakout, retest, and continuation. So BRC. So BRC will be the your setup. So wait for this area to be broke, right? Give you the breakout, then a retest will done, and after the retest you'll get the confirmation on a first green candle, and you can take your buy call toward the upside. And if that breakout happens to the downside, then you can take a sell call. And if I see this ADX indicator also, which I've used over here, so see the uh, DI line is getting weaker, but trend is still strong. So the probability of a downside move is still there into the picture, right? But yes, from here, if this ADX line is getting weaker, then there is a chances of reversal toward the upside is quite high. Now let's see the Euro USD, right? So prices have been followed. I marked this area. See this area. Strong candle up, then again came back. Retest has been done. And I marked this area yesterday, right? And today the market have reacted very uh, good to this, right? And we have a continuation of a higher high and lower low and higher low formations. So let me mark the trend line toward the upside, right? So this is the trend line which is being respecting by the market. I have a candle which have given me the close outside this, right? So this candle would act as a range, right? In the very next candle, which is going to be open after 1 hour 51 minutes, if prices goes down, take a sell call for the target of this zone. If prices continues to move upwards, take a buy call, and this is the order block which is sitting over here, which is resting at 1.1635 level, right? So this is the thing. Now let's move on to the next section, next segment of the market, that is the US 30, right? So for the US 30, we have drawn this line, right? We've been expecting that prices will go up, then take a retest, and I've marked this zone that after coming back into this zone, I need a confirmation, a swing point, right? Which have been made. Again, prices came back, retested it, then again went up. So from now onwards, because we have two fractal points outside this trend line, so I need to redraw my trend line from here to here, right? Now, if prices breaks this trend line also, this trend line also within a one or two candle, high probability that there will be a movement toward the downside, right? And we have the FOMC data also, right? And in the last, we have the BTC USD. So for the BTC USD, strong candle up, right? This is a small order block for which we've been given the projection by this gray arrow that prices might take a reversal towards the downside, right? So this have been marked yesterday, and see this candle have given us a spinning top, which is an indication that the momentum is slowing down. So the probability that the prices might come down, retest this zone, and then again continue to go upwards, or because it this candle is still trading within this range, this candle after the FMC or just before the FMC react very strongly and bypass this high, right, breaches this high, then also it's a confirmation to take a buy call. The momentum is towards the upside and it is going to continue. So that's all for my side. We have discussed each and every important news and important developments of the market. We have connected this thing and discussed everything on the chart, and special emphasis have been given on the gold. Just to conclude in a very short, that you need to have focus that how the market is going to react on the FOMC. Lot of liquidity is resting below, high probability that there will be a breakout toward the downside, then a exhaustion, then a buy move. And before this, right, second scenario, if before the FOMC all of a sudden, or at the release of the interest rate data, all of a sudden you see a spike into the prices, that is a trap. Wait for it. I've given you the upper liquidity area, try to sell from it, right? So that's all from my side. I thank you, all of you, for attending this session and listening to me so patiently. I hope I've tried my best to discuss everything within a short span of time. So this side, Anurag, signing off for today. Till the time, have a great trading day ahead and a great day. Thank you.